The US dollar index reached a new 20-year high after the publication of the US inflation report. In April, consumer prices continued growing at an extremely high pace, over 8.3% per annum. This may force the Fed to switch to a more aggressive policy and to raise the benchmark rate by 75 basis points instead of 50 basis points. Against the backdrop, stock markets are collapsing and the global currencies are depreciating, whereas the greenback is gaining in value as a safe haven asset. In our informational and analytical video reviews, we regularly discuss the market situation, and now we are going to find out what events may shape the market sentiment at the beginning of the next week. Early on Monday, traders will learn that the global economy continues falling. China's industrial production is expected to slow down to 0.7% from 5% on a yearly basis. The decrease could be explained by consequences of numerous lockdowns and zero-tolerance coronavirus policy conducted by local authorities. Under the current conditions, investors expect the People's Bank of China to lower the key interest rate to support economic growth. The fact is that China's industrial sector is the main consumer of Australia's raw materials. Thus, a drop in China's industrial production may lead to a sell-off of the Australian dollar. On Tuesday, traders will switch their attention to the UK economy, analyzing employment data. In fact, the UK unemployment is now at its pre-pandemic levels. This fact encourages investors who are expecting further monetary policy tightening by the Bank of England. A new claimant count report may drop another hint that the UK monetary authorities will continue raising the benchmark rate, thus boosting the pound sterling. In the neighboring region, the situation is the opposite. The European Central Bank is not ready and has no opportunities to alter the key interest rate. Although the Eurozone inflation has reached its peak, the Central Bank cannot resort to decisive measures because of the weak economy and the existing geopolitical situation. On Tuesday, the Eurozone will disclose the second GDP estimate for the first quarter. According to preliminary data from January to March, the Eurozone economy expanded by 0.2% to 5% per annum. However, the prospects are still very gloomy and continue exerting significant pressure on the single currency. The US economy turned out to be sensitive to significant changes. The US inflation has jumped to a 40-year high and escaping consumer activity. Notably, consumer spending makes up 2/3 of the US GDP. According to the forecast, in April, the US retail sales advanced by 0.7% and thus showing a quite good performance. However, on a yearly basis, the indicator's growth may slacken to 4.2% from 6.9%. Nevertheless, market participants are likely to react only to positive data to go on buying the greenback. On Wednesday, traders will again focus on the UK macroeconomic reports. The kingdom is going to disclose its consumer price index data. According to estimates, in April, consumer inflation accelerated to a stunning 9.1%, shocking both economists and investors. The indicator continues surging despite higher interest rates. Now the financial world is in the grip of depression because by the energy crisis, embargo in Russian oil and quarantine measures in China. In Canada, the situation is a bit more stable. Analysts expect inflation to decline to 6.6% from 6.7% on a yearly basis. However, this information will hardly affect traders' sentiment. You have watched the Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading and have a nice weekend. See you on Monday.